audio setting, boost your audio just a little bit, as if all the way max it out under audio, the mic, audio settings, and then drag that mic way over.
I'm gonna be putting it on the page right now. We're gonna
Cool.
go live.
Great. Did you find that, Dave?
I see the microphone icon. I'm looking for it. Let's see.
It's a bottom left. Audio.
Yep. Audio.
And then that little up arrow, and go to audio settings.
Output volume. How's that?
Yes. Yeah, drag it all the way to the right.
Okay.
Perfect. Sounds good.
Sounds better? Great.
Yep.
Thank you.
All right, happy July 14th, everyone. We're here with our RRC New England members. Greg Hanner's online, and he is the president-elect for 2025. He'll be president next year. And we have Courtney, our communications chair on, Christina, who is our membership chair, and Dave Conti, who is our guest speaker today. So welcome, everyone. Just want to go over our 2025 leadership team pretty quickly. We already introduced a few of us, and this is just shows who everyone is. If you need to reach out to anybody, feel free, and we are welcome to get in touch with you and see what you need. Our 2025 strategic partners, our platinum partner is Annie Mack with the Momentum Group. And we also have several gold strategic partners that we want to recognize. And again, one of them here is here today, who's Dave. Just want to go over some events. We have our Blue Ribbon Barbecue hosted by Nora at her house, Nora Smith, in Sherborne on Thursday. So we're very excited to attend that, and any donations that are received that day will go to the Realtor Relief Foundation, which obviously there's a great need. We just had some members in Texas experiencing some of the horrible things that happened with the current event down there. So anything that we can do to help, they always appreciate. So this barbecue is going to help support them. On July 22nd, we have our AI certification in Norwich, Connecticut with Addie Owens. We're looking forward to that. It's an all-day class. Breakfast and lunch will be available. And after that, we are going to be going to the historic Sabino Steamboat in Mystic. So if you can do both the class and the boat, that would be great. If you can only attend the one or the other, that we'd welcome you and would look forward to seeing you. And this is a major investor event, but as RRC members, we invited to come, so that it should be a good night, right, Greg? You're muted.
Absolutely. Yeah.
Yeah, so that should
Looking
be a fun
forward to
event.
it.
And then on August 13th, we're going to be having our networking, which is pre-boot camp at 110 Grill in Portsmouth. So we're excited to attend that as well. And the following day on the 14th, we're going to be having our mastermind boot camp, which is always a good time. We come together as RRC members, and I believe other members can come as well. There's a fee. So we love to see everybody and bounce ideas off each other's, and it's really it's a great time. So if you can attend that, that would be awesome. On September 25th, we're going to be having a axe throwing and golf simulator networking event in Salem, New Hampshire. And I think Christina's smiling because she wants to throw axes. So, so that should be fun. And I do see that Caitlin had joined, so welcome, Caitlin. So this is just a revamp or a re-summary of the events that we have coming up. So we've got our Blue Ribbon Barbecue at Nora's on Thursday. On the 22nd, we'll be having the AI certification class and the Sabino Steamboat ride. On August 13th, we've got our 110 Grill Networking in Portsmouth, followed by the Boot Camp Mastermind on the 14th. September 17th, we're going to be having a 4-hour class in Portland, Maine, which is going to be also taught by Addie Owens, and that is going to become a power lister with the class and lunch to follow after that. September 15th, we have the axe throwing and the golf simulator. Sometime in September will be CRS week, where they do a lot of education. A lot of it's online. We can gather and do some brainstorming about different topics. October 15th is a broker summit in Norwood, Massachusetts. So we'll be doing some networking after that event. October 22nd, we're going to be doing a virtual class for the divorce specialist certification in conjunction with Vermont. So we look forward to that. November 12th, we've got our happy hour for those of us that are going to the NAR convention in Houston, Texas, which is always a good time. And then on December 4th, we're going to be having our lunch and installation for Greg in Waterford, Connecticut. So that'll be exciting as well. A couple events that we just attended were the YPN event in Rhode Island, which we co-hosted. It was an awesome time. There was a great turnout, and we got to network with some Rhode Island folks and some Massachusetts folks, a few Connecticut people. So that was an awesome event that they had, which was great that for those of us that could get down there. And now we're gonna be introducing Dave Conti, and he is in the mortgage industry. He's been around in the industry since 2003. And he also is a past president of the Business Network International. He's a current Needham Newton Chamber member. He really has exceptional service, and he's going to talk a little bit about some lending guidelines, potentially the impact that AI has been having for the industry, and how we as realtors and then how buyers can streamline the whole purchasing process. So he's got a lot to talk about in about 15, 20 minutes. So he lives in Needham with his family, and he likes going to Cape Cod, New Hampshire, Maine, and enjoying the mountains. And so I'll turn it over to you, Dave, and I will stop sharing so that you can share if you have a PowerPoint.
All right, actually don't, it's just me. So I'm just gonna speak here and share a couple bullet points that I thought were important and that I come across in lending commonly, especially when it comes to lending guideline updates. I get a lot of condos about questions, a lot of questions about condos, right? So
Actually, I'm going to interrupt one sec. There we go. Yeah, perfect. Let
All
Dave.
right.
I was trying.
So, condos can be tricky. There's nothing worse than, earning that listing or getting your buyer's offer accepted, and then things outside of your control, like the details of the condo, you find out are an issue 20 minutes in. So one of the bigger questions that I get a lot is, hey, owner occupancy, does this meet the owner occupancy rate? And that has really loosened up a lot. So we don't care what the owner occupancy rate is. A lot of the mortgage, like Fannie Freddie conventional, if you're buying it as a primary residence and you're putting at least 10% down, you get what's called a limited review. So the condo is not reviewed as a whole, like it is if it's a new conversion. So if it's a new build or new conversion, you do need to adhere to certain owner occupancy guidelines. They want to see, 70% owner occupy, low rental units. But if you're putting 10% down or more and buying it as your primary residence, the owner occupancy rate does not matter, does not get looked at. Also for investment property. So I have a client that's buying 2 condos, putting 25% down. When you put 25% down or more on an investment condo, or 10% down or more on a prime residence, owner occupancy does not matter. So that's a nice little perk to know about, because again, I get those questions a lot. But again, that is for established condos only. And then other things that can make a condo non-warrantable are commercial space, right? So that's obviously an easy one. You can see the commercial space. Is it a lot? Is it more than allowed, and so forth? And that might raise other questions. But what you can't see is entity ownership. So, not more than one person can own a certain percentage of the condos. Or what comes up a lot recently is insurance coverages, right? Insurance has become very expensive. So you'll see much higher deductibles than they've had in the past year or two. And Fannie Mae and Freddie Mac have this whole calculation that says, okay, after we do this calculation, the deductible cannot be more than X. And if it is, now all of a sudden your condo is non-warrantable. So, whoever you're using for lending, whether it's myself or another loan officer, try to get ahead of that. If you have a listing, get the insurance binder, send it over to your favorite mortgage person and say, hey, can you take a look at this? We don't want to find out in 25 days that, oh, the deductible is not meet Fannie guidelines and now we need a portfolio lender. So insurance deductibles and entity ownership, how many people own more than 1 or 2 or 5 units, depending on how big the association is. Those are things that you can't see, but if you do a little bit extra work in the beginning, might save you a headache and frustrated buyers and sellers and so forth down the road. So that was the biggest thing on guidelines where, we've been seeing owner occupancy loosen up. And then obviously in the past year and a half, the insurance deductibles tighten up as far as what's allowed. We're all hoping that we're going to see Fannie and Freddie Mac change, meaning that if the deductible allowed per unit is 25,000 and all of a sudden now it's going to be 30,000 based on calculations. Hey, can we just get a $5,000 additional insurance to cover that gap or to cover that shortage? So hopefully that's something that changes in the future, but they haven't really adhered to that just yet. So if we do a portfolio loan, that's something that we'll do. If we say, hey, you need additional insurance, let's have you grab an additional HO6 policy or cover whatever the deductible shortage is. Again, Fannie, Freddie have not allowed that yet, so that does complicate things. But as I mentioned, just a good way to get in front of it if you can, whether you're putting an offer in and you ask for insurance information or you have a listing, and make sure that the condo is not going to run into non-warrantable guidelines down the road. So that's my spiel about kind of some guideline updates specific to condos. As far as artificial intelligence in our industry, and the mortgage world is always a little bit late. I mean, I think just 3 years ago we started, allowing the county started allowing for attorneys to file electronically, right, mortgage documents. So I don't know how much artificial intelligence has helped out specifically, or is it coming into our industry versus automated, I guess, technology, right? So you probably heard about appraisal waivers. So we get, property inspection waivers a lot, and that's for conventional loans under $1 million in purchase price. So when we run our systems, there's a lot of algorithms to help simplify the lending process. And that can be appraisal waivers. That can be for self-employed clients. If you're employed for 5 years or more by yourself, self-employed for 5-year history, we can use just 1 year tax returns. You don't need the 2-year average. So that helps simplify things. Clients now can log in and attach their bank statements and bank accounts electronically versus having to upload documents. So that streamlines things. So just, I think, technology in general, and not so much, artificial intelligence just yet, is definitely helped streamline the process. So, I think what you hear about a lot is probably the nightmares, right? That, oh, we needed so many documents and we gave them, and then people circle back for more. And, we feel like we've doubled this up. Now with a lot of the online systems that we have and other mortgage companies have, the industry as a whole, you're able to upload things, see what you've sent in. There's much easier two-way tracking systems so that buyers are not just uploading documents and getting lost in a black hole, or again, logging on with their credentials so that we can real time, see statements and assets and so forth. So that's helped. It has increased some costs though, right? Because there are all these systems that we're using now for automated and to speed things up. And now instead of calling some companies HR to verify that, hey, we just want to make sure Dave Conti still works there before we close this loan, a lot of these companies are subbing that out to third-party companies like theworknumber.com. And, that costs money, that costs subscriptions. So now those are real costs that lending is seeing. And, clients will sometimes say, well, what does this cost for employment verification? Well, it's just simply because there's systems now that cost money to do that, because we're getting away from someone picking up the phone to confirm employment. So year to year costs are increasing, whether it's for credit reports and verification information. So, you know, it's plus because things run faster, but the minus is, you know, it's a little bit more expensive for everybody. And then, you know, last, I mean, I guess, you know, how realtors and buyers can streamline the process, you know, whether you've been doing this for, you know, 2 years or 20 years, you know, it's, you know, a lot of these buyers need coaching, right? I mean, not only, hey, make sure you get pre-approved, but make sure you're getting the right information given to you and that the right things are being verified up front. You know, there's nothing worse than, hey, here's your pre-approval letter, and then you run into issues down the road. And that can be because maybe clients aren't asking the right questions, but more so, you know, how experienced is the loan officer and the lender you're working with, you know, myself doing this 20 plus years, you know, you've seen a lot, and that experience helps, you know, understand, okay, what are the right questions we need to be asking? Even if it's something as simple as, okay, someone moving from out of state and having to send a wire at the end of this process, do they need to be there in person, you know, at the bank that they have in Texas, if they're moving from Texas to Boston, or whatever the case may be. So, you know, just going through step by step and outlining expectations, I think goes a long way. And then as far as, you know, further streamlining things for buyers and yourselves, you know, a little plug for myself here is this purchase pass program that we have at Leader Bank. We underwrite clients in advance of having an accepted offer. It's really awesome. Not only for clients who might be tricky, that you want to make sure that they're qualified, but, you know, for not just me saying, hey, you look good, you're okay to waive a mortgage contingency. I mean, this is them going through the whole underwriting process. So it's not something that happens overnight. Usually it's about a week before disclosures, after disclosures come out to clients. But we'll collect bank statements, income documents, verify everything. And there's always some back and forth about, we need extra this, we need one more document here or there. We put them through the whole process and they get a commitment letter just like they would on the commitment day when they have an offer accepted. And the only thing we need is appraisal and title docs from a closing attorney, and you can close. So if that helps, you know, offer quick close dates for a seller that wants that's attractive to help separate you from other clients, then that's something that's attractive. Obviously, you can waive a mortgage contingency if you have to go to that extreme, knowing that you've already been underwritten and really the only outside variables are the appraisal and the title work that the attorney's going to do. And, you know, it lets clients go through the process of being underwritten and collecting documents a little more stress-free, right? They don't have a close date that they're up against or a commitment date that they're up against. So hopefully maybe a little bit more enjoyable of a process as they're not stressed out with everything else going on, which happens after an offer accepted. So, you know, just a little something to help separate yourself and your buyers. You know, hey, here's a commitment from the lender versus just a pre-approval or a quick close date or waiving a mortgage contingency, you know, whatever you decide or however you decide to spin it. It's a great way to separate your buyers from other buyers out there and help streamline the process as most of the work has been done. So, I mean, I don't know if anyone has any questions, but it was just a couple points I figured I'd hit that I've come across recently or that seems to make a difference.
Do you guys have any questions? Greg, you're muted.
There we go.
So-
Got it. Yeah, I had two questions, Dave. From a lending perspective, do you guys have a group that could just lobby for us as agents to be able to get access to desktop underwriter? You know, inside of I'm sorry, not desktop underwriter, the Fannie Mae condo project manager. You guys have your underwriters have access to it in desktop underwriter, but we don't. So we have to call. I am always calling when I have a condo complex that I'm not familiar with to find out, is it warrantable?
Yeah. Yeah, that's a good question. I mean, you know, Leader Bank's great and always trying to think of outside the box, you know, innovation differences. So I'll put that in as a request and say, is there a way to get CPM or some kind of platform for agents so that they don't have to follow up with the lender and say, hey, can you check this? You know, and you can just check it yourself. That'd be huge. Yeah.
Yeah, because we could do that with the FHA approved condos.
Yeah. Yeah. I don't know why that's not more mainstream and more available for everyone. So
yeah. And then the other second question was, had an appraisal this morning and the appraiser let me know, he said there's something coming down the pipe. He just had a 8-hour class on a uniform format for all appraisals that's rolling out. And can you speak to that about the expanded data fields? Like he's saying to me that the condition rankings, instead of the property condition being overall, he can do inside, he can do outside, ceiling heights, height for the steps coming into the home, all these new data fields. He sees it as, instead of being 15 to 30 minutes in a house, he might be there for 1 to 2 hours collecting data.
Yeah, I mean, the appraisals are already in depth and require a lot of information. And now, I mean, I would think with, the automation that things would get easier for them, and it seems like it's going the other way, right?
It does. And he's like, yeah, you might want to think your appraisal costs are going to be going up a little bit.
Yeah, I mean, for each of those fields to have to update that, manually every time, I mean, that's a ton of work. So we'll see, if that gets, maybe streamlined a little bit or condensed. Yeah, I guess, that's why, with the systems in place, the property inspection waiver is so great when you get one, because hey, we don't have to worry about all that extra work or the time it takes, never mind any issues of value or anything like that. So yeah, we'll see what comes across. Sometimes the changes that are made in the industry aren't always the best. We say who's making these changes and who's making these updates. Not usually it's people not working in the industry like us. It's just the upper echelon. So yeah, we'll see what happens with those appraisal changes and if it come, hopefully it doesn't delay things too much.
Do you see insurance costs just going up and increasing and becoming more and more of a problem?
Yeah, I mean, insurance is expensive. I was just sending out some templates that I had the other day, and I'm like, wow, I got to change my template because insurance is so cheap. Just when I do some kind of casual estimates for clients. But yeah, I mean, not only for single family and regular owners, but the condos too. I mean, those premiums are huge. So the only way to make it cost effective is to make deductibles higher, and then allow clients to go out and get their own kind of insurance to kick in if they ever had to pay a deductible. But yeah, for clients too, if someone's on the edge of qualifying, you got to be careful, make sure you're using, the right estimates for insurance, because that's a variable that typically doesn't come into play until, 2/3 of the process of the way in. Oh, I got to get an insurance quote. So I'm usually very conservative with that, but yeah, I mean, $2,000-3,000 a year, depending on the property, is, starting to be the norm.
And is there one thing that you would say, do you think is the biggest hiccup in the whole loan borrowing process?
I don't know. I mean, we have a lot of systems in place that ask for a lot of this information upfront now. So that's huge. I mean, as a loan officer personally, trying to hit all the buttons and all the checkpoints in the beginning, typically you're just battling over the best rate and best closing costs. And then once clients are kind of into the system, they're off on their own, right? Submitting documents. We have some new systems in place that, I have clients now, the week that they're locked in, starting the process. Oh, do I need an insurance quote? Maybe we haven't talked about that. And we say, yeah, let's do that sooner than later. So, instead of coming up, a week and a half before closing, we're looking to clear them for closing and they haven't even looked into insurance yet. Now that's something, just because of the processes that we have, is getting talked about in the beginning. So, between that and then just, green newer buyers that, don't realize, oh, we need, a check at closing to go to the closing attorney, just those simple logistics are things that, I try to cover up front with some of the templates that I have. Even once like a commitment goes out, hey, you're approved, here's your commitment. And then I'll piggyback off of that with the closing attorney on there about cash to close. And people say, oh, I didn't realize that'd be a bank check. I mean, things that we take for granted that we just think are simple. And then you're like, oh, wow, I'm glad we talked about this. So I would say things like that last minute, we have a team that sends out condo questionnaires in the beginning of the process so that we're not getting, that halfway through the process and finding out information that we would have liked to know in the beginning. So insurance, condo questionnaires, cash to close, those logistics are kind of important that, can sometimes come up last minute, but we've seen them, as they become problems, Leader Bank specifically says, hey, listen, let's put something in place so this doesn't happen again. So that's helpful.
I just had a client, which it did close, thankfully. But we, the whole team thought that we had told her, but she ended up going out and buying furniture in like $12,000 worth of, like, with appliances and all that.
Yeah.
Almost killed her deal. And she's like, well, nobody told me. It's
Mhm.
like,
Yep.
seriously?
I know.
So I don't know. I guess there's always something that, might fall through the cracks that you think everyone told the borrower, but for
Yeah.
whatever reason, they didn't get. So
Yeah.
the loan officer had to come up with creative solutions so that she had enough to be able
Yeah.
to close the deal. But are you coming across those things that tend to slip through the cracks still?
Yeah, I mean, creative solutions, that's why we loan officers still have jobs, right? Yeah, we actually have, back to technology, we have a great kind of cartoon video that goes out automatically during the process about once you're locked in and what to expect. And some of that is, hey, don't go shopping and be buying new things. So I get calls from clients all the time that are in processing, hey, Dave, we just want to make sure we want to go buy, whatever, a mattress or something like that. So clients are checking in with me more than normal to say, hey, just want to make sure, is it going to be okay if we spend this money out of our bank account? Or is it going to be okay if we open up a charge card because, yeah, we're trying to get furniture or whatever. So, depending on that client, I can look at the loan application and say, hey, your debt ratio is very low. Yes, if you want to open up a card for perks, you can. But just be aware, we're going to have to document that, because when we pull credit at the end of this process, not new scores, but a comparison report, that's what we see. We see new inquiries, and we want to make sure that if, that inquiry was with Jordan's, that it's not a new account. Or if it is, let's add that to your debt. So that's when things come up. So 7 to 10 days before closing, the mortgage industry will call your employer to make sure you're still employed, not income numbers, just make sure you're still working there. And then we'll do a comparison report. So we'll see any new inquiries since we pulled credit. And we'll see if, balances have been run up. Did you, apply with a credit card that had $500 on it and now it's now 5,000? Do you qualify with that new payment? Or have you in fact gone and opened up new accounts? So, yeah, some of our intro videos and throughout the process are reminders of, hey, clients, don't do this, or check with your loan officer before you do to see if you have wiggle room. Were you close to qualifying, or do you have room to take on new debt? So,
Dave,
So
that pre-closing employment check, you also doing a softer hard pull right before on the credit?
we do, yeah, that's that comparison report I was talking about. So it's not new scores, it's not a new inquiry, but it is a comparison report to show, have balances gone up? Have new accounts been opened? And have there been any new inquiries? Has your credit been pulled since we started this process?
Yeah,
So,
the reason for that question was to see if loan level pricing adjustment would kick in and possibly change the rate if there was a new number. Because I've you're local, you're right here in New England, and I've had some national lenders go and on the surface quote ridiculously low rates, but they don't factor in the low loan level pricing adjustments that increase the rate.
yeah. Yeah,
And
so it shouldn't, because we're not pulling new scores. So the credit
okay,
scores from beginning to start, unless you've gone outside of the 4 months that a credit report is good for, we wouldn't be pulling new scores. So
okay,
the loan level price adjustments in the beginning should be the same as when you're closing. Unless it's like a new construction, for instance, and maybe the credit report, which is only good for 4 months, does expire, you could get stuck with pulling new scores, and that could definitely change terms if scores have changed.
all right, we
Now,
are
can
at
you
about,
lend in-
go ahead.
Sorry,
ahead,
can you lend in all 50 states?
We do 48, so not Hawaii, not Alaska, but the continental. So yeah,
All right,
I
good to know.
do loans everywhere. Yeah.
We are at about 12:30. Are there some last words or pieces of advice or things that you think are helpful that you want to comment on?
Yeah, I would say, and I tell this to everyone is, use me as a resource, no question is too small, and, it's always good to double check. And sometimes I don't know the answers, guidelines are changing all the time. But, in the office I'm in, we have a lot of loan officers. We see a lot of loans come through our offices. So even if I don't know off the bat, or if I want to double check, I'll run it right by underwriting. Hey, underwriting, can you confirm this is going to work? Or is this going to be an issue? Whether it's CPM or property type, or something outside the box. And other than that, I would just say, yeah, it's important to, you know, use everybody as a resource, and experience is key in this industry. That seems to be always changing, you know?
And if someone does have resource questions or otherwise, how can they reach you?
Yeah, you can reach me via my cell phone, or you can shoot an email. Email is probably even best, but cell phone's great too. But you can email me at contiteam@leaderbank.com. That's myself and my assistant, so at least you have at least 2 people responding to emails, which helps us get back to you faster. And then obviously you need something even quicker, you know, shoot me a text. You can always call or text on my cell. That's always a easy way to get me as well.
Okay. Well, we do appreciate you coming on and being a strategic partner. And thank you for being here.
Yeah, no problem. Thanks for the invite. Good to see everybody, and see you at the next event.
See you next
Okay, and I know-
Wednesday. Is it
Yeah.
Wednesday?
It's Thursday.
Thursday.
You going to the barbecue?
I
Or-
don't think I can make that, unfortunately. I
Okay.
have a prior engagement, but I got the list, which is
Okay.
very helpful. So thank you, and I'll try to see you guys at some of the next ones.
All right, sounds good.
All
Thank
right.
you, Dave.
Thanks, guys.
All right,
All
bye-bye.
right, bye-bye.
Bye.